Hey, we're going to get rolling here this week, and the one thing we just want to touch on here this week is fertilizer prices or input costs. I mean, everyone know they've gone up substantially, but what we want to bring in front of you right here is actually how much they've gone up. I mean, the big sticker shock out there is anhydrous prices. As you can see, a year ago they were under $450 a ton. Now they're over $1,300 a ton, a 200% increase. You had urea jump from 358 up to 867, even dropped down to some phosphates in here. DAP from 462 up to 826, up 80%. Potash up 125%. And then when we get to the very bottom, okay, we've got diesel fuel prices jumping from $1.80 a year ago to $2.94 right now, up 63%. And natural gas prices are up a similar amount. I mean, so when the government wants to put out their inflation numbers and everyone on the national media is screaming that inflation is out of control, they're really looking at the fuel prices on the bottom, but really they've got nothing to complain about when you start looking at what fertilizer prices have done above and how they affect you on these input costs. So what's going on in here and why have prices gone up? The one we'd like to focus on right now is nitrogen, or more specifically anhydrous, and the reason why is nitrogen accounts for more than half of all the fertilizer that's used. Just an interesting historical fact is it was back in the 1920s when the Haber-Bosch process was developed, which could then take natural gas and synthesize it into ammonia, so you actually had a nitrogen product to use. So when we look at anhydrous prices in here right now, we really want to come back towards natural gas as the base cost of anhydrous. Okay, 60 to 70% of that cost in producing anhydrous is actually natural gas. So how much natural gas does it take to produce a ton of ammonia? It takes 33 million metric BTUs. Now on the very bottom, we think this is an interesting stat here. A year ago, when we had natural gas at $335, it cost a little over $110 a ton to produce anhydrous. Now this past year, when you had natural gas at $543, that cost jumped almost to $180 a ton in here right now. Well, as you saw in that first chart in here, your cost is substantially higher. Now, is there a way to hedge anhydrous needs, okay, with natural gas? Well, take a look at this here. A natural gas contract is 10,000 million metric ton BTUs. A contract then of natural gas would produce about 300 tons of anhydrous, or about 12 semi-loads. So would natural gas work as a hedge? Let's just look back here. On April 1st of 2021, we had December natural gas futures at $3. At the end of October, that same December contract was at $5.75. Therefore, the gain on one contract of natural gas would be about $27,500. Well, if one contract of natural gas is 10,000 million metric ton BTUs and that produces over 300 tons of anhydrous, how much did anhydrous jump up at that time? Well, it went up about $500. Therefore, a full contract of natural gas, as it's converted into anhydrous, gained over $150,000 in value. So sort of does natural gas work as an anhydrous hedge. It helps a little bit, but nearly did not cover this complete jump. Now, as I look at a natural gas chart, our thinking is a high's been put in place on natural gas as the market got about $5, then went to the 2014 high near $6.50, and now has pulled back. Now, this chart will determine on where anhydrous prices are at. If natural gas softens up, we would anticipate that anhydrous will weaken up as well too as we head into 2022. So here are some final thoughts on this thing. Is natural gas is up 62% from a year ago, fuel is up 63%, but anhydrous is up 200%. Now, is this price gouging, or is this market forces in here? You know, we think it's a little bit of both. Our thinking from a fertilizer production standpoint is that fertilizer companies feel they sold stuff too cheap last year, and so they're trying to make it up a little bit this year. On the other hand, you do have a good demand push out there from producers wanting to get their anhydrous or nitrogen needs locked up. And the other thing that occurred is we did have some disruptions in nitrogen production with the hurricane that we had this past fall. So it isn't all price gouging. as there are a number of market forces that are taking into consideration as well. The other thing to keep in mind is the retailers are just passing this cost through. There's really no more margin for them when they're selling anhydrous at $500 or $600 a ton compared to selling it $1,000 or $1,200, a ton. So that's something that you need to keep in mind when dealing with the retailer. I mean, if you want anhydrous or you want nitrogen, they're going out to that market and buying it for you. They're not wanting to hold on to this price risk. Well, would we encourage guys to book right now or to hold off? Well, when we look at the natural gas market, that's telling us we probably should wait a little bit in here, as that looks like it has peaked out. On the other hand, when you look at fall corn prices around $5.50 a bushel, we don't think producers are going to be balking too much at the higher, natural gas, or at the higher anhydrous prices or nitrogen prices in here right now. So, I mean, it's just really a dilemma. Our thinking is, though, is that we'd probably want to wait, as we think that big push for nitrogen is behind us, or at least nearing an end. As a corn farmer, though, holding some physical corn as an inflation hedge is probably a good thing to do. A major reason why corn could rally or hold together here is either higher energy or natural gas prices, higher crude oil or natural gas prices. So, holding some physical corn as a fertilizer hedge isn't the worst thing to do. If you choose to buy some of your fertilizer inputs right now, we do encourage probably look ahead and protecting some of the commodities that you are producing, whether it's corn or beans. Look at protecting the margin that's out there. Again, we wanted to just bring you some facts in here and what's going on over on the fertilizer side of it. If you have any questions or ideas on an upcoming webinar, please let us know. Have a great Thanksgiving. We'll see you next Tuesday.